This week in economics, the iHeartRadio edition. Numbers man here on the, the 6th of February 2013. We'll start off with some PMIs from the Market Organization, which is based in London. And we'll take a quick look at some of the German retail PMI. We'll look at it first here. Retail sales rise at a fast pace. That's the key points here. Optimism for the month ahead. Signal and wholesale price inflation accelerates. The report contains the January findings from the monthly retail PMI survey for Germany, produced by Market, based on a panel of 400 retailers. The headline figure from the report is the retail PMI, the measurement of month-to-month change in sales. Strong growth in retail sales. Seasonal adjusted German retail PMI, which measures month-to-month changes in sales for a like-for-like basis, rose in December, 51.7. to 52.3 in January, therefore signaling an acceleration in rate growth in Germany. Moreover, retail sales have now risen for 4 consecutive months, and anecdotal evidence links the latest improvements to increase tourism and promotion offers. Wholesale price inflation accelerates. Inflationary pressure in German retail sector intensified at the start of 2015. The rate of cost inflation was higher in the 4 months, but remains well below the series average. German retail sales also increased in annual basis. However, the rate of growth eased markedly since December and was originally marginally overall. Weak drop in margins following the trend observed throughout most of the survey's history. Gross margins at German retailers fell, and that's the same thing in the U.S. Basically, reports of sale promotions and higher input costs. However, the rate at which margins declined eased since December. January's data signaled a third consecutive month rise in buying levels by German retailers. Some panelists linked higher purchasing activity to increase sales volume and efforts to replenish stock. Consequently, stock of goods for resale held at German retailers increased in January. The rate at which inventories accumulated was the strongest since August. This modestly overall. Rate of job creation accelerated slightly, as has been the case since 2010. German retailers increased their workforce numbers in January. The rate of job creation for the second month running was most marked since last September. Optimistic outlook for the month ahead. German retailers expect sales to exceed targets in February. The degree of positive sentiment was marginal. Meanwhile, German retailers missed their sales target again in January. The degree to which companies underperformed was the strongest since September of last year. There's some commentary here. German retail PMI data. This is from Oliver, and I won't try to pronounce his last name. German retailers signaled a positive start to 2015, with sales levels rising at an accelerated pace. Moreover, the recent slump in oil prices has started feeding through to the consumer soon and will hopefully boost spending in the months ahead. That is from Oliver Konsolowski. Nonetheless, we'll move to some of these other PMIs here. The Market Organization released a number. We'll go to France, the retail PMI there. and briefly scan over it. The French economy sales fall at the sharpest rate in 4 months during January. The key points here: rate of decline in sales accelerates, margins decrease at the fastest pace since March of 2013. Summary: the release contains the January findings from the retail panel. There's 300 involved here. French retailers indicated that a further reduction in sales during January. Moreover, the rate of contraction picked up to the steepest in 4 months. Sales were down considerably on an annual basis. Annual sales once again disappointed relative to previous set plans, which retailers were pessimistic regarding the 1 month outlook for sales. Gross margins fell the sharpest in 22 months, despite a weaker rise in retailers' purchasing costs. A further drop in purchasing of goods for resale failed to prevent stock levels from rising. Employment remains unchanged over the month. Seasonal adjusted headline retail PMI record at 44 in January, down from 46.5 in December. You can kind of see what's going on here. The latest index reading was the lowest in 4 months, pointing to the market rate of decline in sales. Panel members commented on tough economic conditions, low consumer footfall, and weak consumer purchasing power as key factors behind the latest drop in sales. Among shoppers in the wake of the Paris attacks, sales were again down on an annual basis in January. Although the remaining market, the year's rate contracted, eased since December. Gross margin in French retailers remained under pressure in January. The rate of decline in margins accelerated to the sharpest in 22 months. Actual sales continued to fall short of retailers' previous set plans in January. And let's see, we get a comment here from Jack Kennedy, he's a senior economist at Market. The French retail sector continues to struggle at the start of 2015 as weak economic conditions were reflected as subdued performance on the high street. There were also reports that already low consumer morale had been hit further by the Paris attacks. So the French economy basically is where it was, continually down, as one would say. Let me grab a couple of other things here. This is released, incidentally, on the 6th of February. We'll get the Asian PMI. We'll kind of make a little circle here, and we'll get back to the U.S. And we'll get the key points here. Sharp increase in business activity in general and industrial sector. Healthcare, technology, equipment companies were also seen steep increase in activity. Metals and mining registered quick contractions there. General industries saw the sharpest expansion in business activity out of all 14 detailed sectors in January. That's according to the latest Asian PMI. But it was the steepest rate of output seen in this sector since the series started in 2011. Healthcare sector also registered strong growth over the year, with the pharmaceutical and biotech industry and healthcare services ranking second and fourth place respectively. Meanwhile, technology, equipment, and beverage and food were the fastest growing manufacturing sectors in January, placing third and fifth in the growth table. Metals and mining was the weakest, not unusual. Banks, transport, and chemicals were the only other sectors to report reduced activity. Factories and forest and paper, which ranked at the bottom in Q4 saw first expansion of output since March of 14. Very short and sweet here on the Asian PMI. Now let me get some other selections going here. Try to the U.S. service PMI. We'll get it. This is the final data here. The key point is service sector activity growth rebounds from December 10-month low, but new business levels increase at weaker pace. Input cost inflation failed to lowest level falls to lowest level since over 4 years. January's data points to a sustained growth of business activity across the U.S. service sector, but the latest increase in the coming months was the lowest since the surveys began in October of 2009. Service producers, needless to remain upbeat about their prospect for growth over the year. And fuel prices continue to the slowest rise in average cost burden since November 2010. At 54.2 in January, the final seasonally adjusted U.S. Service Business Activity Index picked up from 53.3 in December. The index has now registered above 50, no change threshold in 15 consecutive months. Output growth was still much weaker than the peak seen in mid-2014. Adjusted for seasonal influences, the final PMI market composite PMI index, output index covering manufacturing and service, posted 54.4 in January, up from 53.5 in December, above the neutral 50 there. The latest reading indicates the U.S. private sector's output growth rebound since the previous month, but was still the second slowest since February of 2014. Slower new order growth continues to weigh on the performance of the service economy. At the start of the year, the rate of new business expansion has weakened every month since October. The latest rise was at least marked in almost 5.5 years data collection. Some firms noted that greater caution amongst clients has led to more subdued sales growth at the start of 2015. Meanwhile, volume of work in hand, not yet completed, increased only marginally during January, with rates backlog accommodation easing to the slowest in 6 months. Despite moderation in new business growth, service providers continued to add to their payrolls. Moreover, the latest survey indicates that job creation picked up slightly from an 8-month low recorded in December. Staff recruiting was linked to outgoing company expansion plans and confidence towards the business outlook. Service providers indicated positive sentiment in terms of their prospects for growth over the next 12 months, with a degree of optimism the second highest since June of 2014. Average cost burdens increased only marginally in January. The overall rate of input price inflation eased to its weakest for just over 4 years. Meanwhile, average price change by service providers continued to rise at a subdued price level. We like to see this. This is from Dr. Chris Williamson. The market U.S. PMI service accurately anticipated the near halving in the pace of economic growth in the fourth quarter of 2014, and suggested that the rate of expansion remains little better than 2% amortized at the start of 2015. Companies are clearly struggling